It's Sunday night, which means it's time for First Call. 5 minutes from the futures market open. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, I can't help but see you're wearing a Chicago Bears shirt today.
It's true. Look, Chris, it's been an all around great weekend here, okay? For me in a lot of different ways. First of all, the Miami Hurricanes won. Let's just do things in chronological order here. I'm a huge Miami Hurricanes fan. I grew up in Miami. Miami Hurricanes won their playoff game. Rightfully so. We were rightfully placed into the playoff. Yes, we did win it all. Then, yes, you're right. This beautiful shirt that I have in front of me, look, I got to tell you, I was in hostile territory this weekend in my own home. That's right. My mother-in-law was here, my brother-in-law and his family. My wife, matter of fact, the only other Bears fan in the house is my youngest son. And yet we prevailed. It was a really good weekend overall. Watch Jake Paul get knocked out. I mean, so many different things happened this weekend that were just really entertaining.
I can't believe when he didn't fight a YouTuber or a retired old man. He lost. Color me shocked.
He lost big to a humongous fighter. So, yeah, it was a highly entertaining weekend overall. And I got to tell you, one thing that I watched this weekend that was probably the most entertaining, you know how Dave Letterman has those interviews. He interviewed Mr. Beast. That's very highly entertaining, especially for people like us who are on YouTube. I suggest watching it.
Yeah, Mr. Beast is starting a new financial network for helping people make good investments. Jamal, competition.
You'll put us out of business.
A collaborator. Hopefully doesn't get into options trading.
He doesn't even have to know anything about finance, and he'll put us out of business. He knows the algorithm backwards and forwards.
Jamal, we're going to start structuring First Call a little bit more deliberately here moving forward. I know we're in the last few weeks of the year, and quite frankly, there's no First Call next week. So consider this, a soft launch for what we're going to try to accomplish here in these 30 minutes. We're going to break it down into 3 segments. We're going to call it Vol Week in Review, Single Stock Quant Check, and then the Micro into Macro Week ahead. Obviously, with the market opening up in a few minutes, we'll get over into the Vol Week in Review on the other side of that. But before we get there, let's talk about last week, because last week, as we go to the charts here, was a week where stocks actually were able to edge out a little bit of a gain. The S&P 500 finished higher by 0.83%. That one's for Josh there. He loves when I quote those out to the 100th. We have the NASDAQ here. That was up by 0.5%, just a little bit more than that. Your Russell IWM was down by 1.21%. Gold did well. Silver did even better, close to a 9% gain. Oil was off about 1.2%. The dollar mixed, slouched. Okay, so when we think about this market heading into the forthcoming week, it is obviously a week where we end last on the lows for vol here. So what do we make of our VIX? What do we make of this market where volatility futures across the curve settle in and close at their cycle lows if it's the January, the February, the March expiries?
Yeah, it was quite a week. I mean, first of all, it was expiration, OPEX, right? December OPEX. I can't remember the size. I want to say 7 trillion. That might be off. It was a big one, actually, and pretty big considering it's December. I mean, January is usually the biggest one, right? They're around pretty much all year. Thus, you can expect that this coming January is going to be a big one, I assume. But expiration week, also VIX expiration week, which, again, we talk about this a lot. When the VIX expires, sometimes we'll see some volatility. And we actually saw it this week because, remember, early in this week, it was really looking ugly. Markets weren't really looking good. They were drifting and leaking lower most of the week. It just seemed like that was the kind of way it was going to go. I felt like on Monday last week, and you can check the tape on OTCL, I basically was like, I think we're just it's going to feel like a lot. I remember the expected move Mikey and I were talking about was 88 points. And we were like, is it going to exceed or not? And I said, I think it'll exceed. I think we're going to move around a lot, but we're going to end up in the same place. And lo and behold, that's kind of what happened. We basically got to almost 68.50 in the SPX. I think we started the week a little higher than that. So, yeah, it was kind of a nothing week in a way, but yet there was a lot of activity, I think, overall.
Speaking of activity overall, we are getting a gap open higher here to start this trading week. The S&P 500 up by 18 points or so, 19 points, 69.05. We closed last week around 68.93. The NASDAQ likewise up 0.3%, the Russell 0.3%, the Dow up by 0.2. We make our way over into the metals just because they've been so volatile recently. Gold's off by 0.3%, silver basically unchanged, copper 0.3% lower here. Bonds, those are down across the curve here. We had a pretty big data week last week, but we'll talk more about that with Ilya in the second half of the show. The dollar off slightly here, actually up now. Yen, touch weaker. The euro, a touch weaker. But the big movement is the movement here in stocks, gapping open to start this holiday trading week, Jamal. It was a really interesting close to last week when you think about the equity market. I see signs of turning a corner because we're heading into now what could be the Santa Claus rally window. We're not there quite yet, but the final 5 trading days of the year, coupled with the first 2 of the new one, constitute what we colloquially refer to as the Santa Claus window. It's the period of time since 1950 where the market's rallied on average 1.3% in the S&P 500. And it lends idea to the fact that if you go into a strong start for the year, you typically have a strong first quarter. Notably, Jamal, last year we did not have a Santa Claus rally. And the first quarter was not great for equity markets. So I'm personally keenly interested as we think about this week ahead, reflecting on the fact that vol comes in so hard, so fast across last week that maybe we're set up here for that low vol, low volume, scratch and claw push higher to the top side of recent trading ranges.
Yeah, I mean, that's what everybody's kind of waiting on, right? When you talk about the Santa Claus rally, that would be the fuel to the fire that pushes us potentially to 7K. I don't know if you're looking at 7K in ES, or if you're looking at possible 7K in SPX. Either way, I think a lot of people are kind of eyeing that number, right? I mean, obviously we got a ways to go there, but it's something that I think a lot of us are eyeing. And look, it's kind of set up for us at this point. I feel like we went through the rough patch, and CPI. I mean, there's been a lot of doubt about whether that number really mattered, whether the inputs mattered, and we'll get to that later, I'm sure. But that was obviously one of the things that last week you could have taken us down, and it didn't. And so there's really not much data coming. And again, we'll talk about it. I mean, I'm not the data guy. We'll get to that in a little bit. But there's really not much that could hold us back is my point here. I feel like markets could head higher. We do somehow or another need Bitcoin to participate. It's almost like they're tied together now, Bitcoin and equity markets, especially NASDAQ names. And that we just need those, I think, to kind of help push the market a little bit higher as well. One thing that surprised me last week was Micron. I mean, you looked at a lot of these earnings that we've had in some of these tech names, and most of them kind of disappointed for whatever different reason. Not Micron, though. Big move there. Yeah, big move on that one. And I think that kind of helped get the party started a little bit, especially to end the week with NASDAQ.
You mentioned Micron earnings. Micron, I think it was like 13.6 billion versus 11 billion expected on their revenues. That worked out to the EPS was something like $8 a share versus like $3 expected. Absolutely a wild number. What a turnaround it's seen over the past several sessions. December 17th, it was at a low of 221. It closes last week at 270. So we have some of these tech names, Jamal, and I think actually that's a good transition here. We're thinking about some of these big names heading into next week, but starting with the sector level performance first. The semiconductors started to perk back up, particularly in the final few trading days last week as volatility started to crush again. I noticed that they're back above their 1 week, their 1 month moving averages. Semiconductors, they're able to take the baton once more. The last 2 weeks of this trading year could be a little bit better for the bulls. I note that NVIDIA looks like it's trying to break some semblance of a corrective down move here in recent weeks. Notably, low volatility across the board in all these names, though.
Yeah, and the other names too, it's funny, we talk about this a lot, right? Oracle and CoreWeave. We know that story that's been centered around the CDS thing. I think you and I both laugh at how much that's made such a big deal. But nevertheless, those names had a big rebound on Friday, I think it was. And I think, again, that shows you some more participation from the NASDAQ, which potentially could push us higher. But those names, when those names have weighed down the market, it's been ugly at times. And when they move higher, the market rejoices, just like it did on Friday. So I think more participation like that from names like this and Oracle will probably help matters as well.
Thinking about the options pricing for the week ahead, I'm looking at the ES options chain here on the platform, and that December 26th close, I see 57.48 priced in. Okay, that's less than 1% over the next several trading days, Jamal, and understandably so. Wednesday's Christmas Eve, Thursday's Christmas, so half day Wednesday, markets close at 1 Eastern. Thursday, they're obviously closed. Friday, they have to be open. You're not allowed to have markets closed 4 days in a row in the United States by law. So Friday, people are going to pop online for the sake of doing some window dressing. Is the market underpricing vol for this week, given the sweep of event risk that we have ahead of us?
I don't think so, man. Honestly, I expect a pretty slow week. I don't think so. I don't really know anything that could really change matters. I mean, I don't know. I don't see why. Again, that doesn't rule out the kind of range that we have for the week, but I don't know. I don't know if this is. I think it takes a solid, this week and next week to put if we're going to continue to drift higher. Which again, this is kind of the mode that we're possibly in. I think if you had to ask me to bet on when we get to 7,000, if that were to happen, I would say probably sometime next week, considering how, again, we're missing a day and a half. So I think that's kind of what I'm expecting. I'm expecting some low volume here, Chris, to be honest with you, over this week.
Yeah.
I mean, there's not really any major earnings that's going to move things. There's, not a whole lot of other major news. It's really, everybody's kind of looking at 2026 at this point. Wow, that's kind of weird coming out the mouth, 2026, but that's where we are.
Less than 2 weeks away from the new year. Jamal, what surprised you more about last week? Was it the fact that volatility closed so low that, we can go over to something like VVIX here on the platform. VVIX absolutely plunged. Is this the lowest close of the year? I think that might be the second lowest close of the year in VVIX. Yeah. Okay, so VVIX
really
is
83? No, is it?
Yeah,
Oh,
man.
holy cow, it's 83? Wow, that's crazy.
Right. Okay. So we have VVIX closing at the second lowest level of the year.
I guess that may be the thing that surprised me the most on the week. Honestly, last week didn't really surprise me. We came in with, expecting those numbers or whatever, right? And again, they're kind of outdated, but I expect markets were weak and they were actually weak throughout the week. And then we eventually, again, ended up almost where we started. That's really the way I saw it going. So one of the few times I was right about the exact movement that I thought was going to happen in the market. So I don't know. The biggest thing that surprised me, I guess, is seeing where VVIX is that low. And the other thing is Micron earnings. I really thought Micron was going to just tank on earnings because that's mostly what we've grown accustomed to seeing. That's what Oracle did. That's what, Meta did. That's what Microsoft did. We saw that from a lot of those type of names. So that really surprised me. I think AMD was down on earnings too. I can't remember, but that probably surprised me the most, the big move from Micron. And that felt like, okay, that's going to be that's going to be the thing that helps us get on the ramp to higher prices towards the end of the year. So that's probably the biggest thing.
I couldn't help but notice last week we had really big trading volumes. It felt like last week was the last week of the year when you think about the trading volumes around expiry. Friday was actually fairly light, all things considered. But Monday, Tuesday, Wednesday, Thursday, you look at ESH6, you're seeing north of 1.5 million, 2 million contracts traded each of those 4 sessions. So it's not like volatility collapsed in a week where there wasn't a lot of participation. There was a lot of participation last week, above average across the board. In fact, Frank here, our resident CBO or CBO whisperer, he points out that CBO's data suggests Friday's options volume of 79.6 million contracts was 25% above recent levels, with calls leading puts 4-3. Among the 500 most liquid single stocks, 30-day implied volatility was higher for 59 and lower for 369 stocks from all. I think that to me is my surprise about vol last week. It's that not only did it come in so sharply, VIX at 83, 84 if you want to round up, but VIX giving us a 14 handle potentially as we look to start open this trading week. Volatility futures across the curve down, a really steep contango starting to form in those vol futures. And then it's all marked by the fact that this was a strong participation. I love it. I gotta like it. So you mentioned 7K in ES this week. How are we staying positioned here?
I don't think this week. I actually think next week, but
well, that's fine. Next week's fine because the way that I'm trading this, I need something to happen by next week because I'm sitting on this December 31st call spread for 7,000, 7,050, and it's beginning to not look a lot like Christmas here. It's beginning to look a lot more like the nightmare before Christmas. This could just be a trade that I throw away a little bit of premium. It's a reach. It's an out of the money call. But I'm feeling better about it today, thinking about how this market has evolved in recent sessions. It makes me feel comfortable as someone who will be here right? Not a lot of people are going to be trading this week and next during these thinner conditions, but it makes me feel comfortable at least hanging on for now and still pushing this to the upside, both in that ES call spread and then on Friday moved over into the MES H6 contract, which working out pretty well here so far. Moving up into, got some 15 points on the board. We'll take it, but looking for a move to continue this to the upside.
Is your spread for this week or is that for next week?
10 DTE. 10 DTE.
Okay, sorry. Yeah, I'm sure you're laughing at the same thing I'm laughing at. Holy cow, I don't know what's going on. Yeah, okay, that's good. I would say that's exactly the way. I almost look at this week and next week as like 1 week together. You know what I mean? Because again, there's like a day and a half, two and a half days, I think, that we're missing out of the next 2 weeks in a way. And I don't feel like, I don't feel like there's much news that's different in these next 2 weeks. I feel I don't think that we're necessarily waiting on anything this week or next week. They're kind of the same. So hopefully that being the case, that leads to just higher prices, Chris, and maybe you do get fully, your spread gets fully in the money as a result of the way the week might end up going.
Before we hop off the indexes and go into single names real quick, and I do want to do kind of a single stock checkup here. If the indexes are showing volatility levels this low, NASDAQ 13 IVR, S&P 11.7, your Russell at a paltry 3.4. I can't remember the last time I've seen a Russell volatility that low, Jamal. How do you approach this duality? It's not only just really low vol, which as a tasty trader, that's already difficult or more difficult set of circumstances to contend with, right? Certainly we prefer a little bit more elevated volatility than that if we're looking to sell it. But then also you have this holiday coming up. So when you look through the setups here in the NASDAQ and the S&P and the Russell, do you prefer one to the other if you're going to be operating the next few days because of the vol and technical arrangement that you see on your screen?
This is actually a really good question, especially given like the time period we're in. You just said how low vol is. First of all, I'm not going out trying to find a bunch of shorts. And there's varying opinions on this. This is something I used to talk about when I first came to Tasty. Honestly, when I worked at a trading firm, you come in a week like this and people were short. I mean, just short vol. Like it didn't matter. You find the biggest, juiciest straddle you could find, which are usually a name that's $1,000 or $2,000, and you sell vol in there, and you just let it sit for the next week or so, probably two, because you just figure it doesn't matter how low it is, it's going to go lower because there's nothing that's going to create a vol spike situation. I don't kind of do that thing anymore, and I think as a retail trader, we don't necessarily have deep pockets like that. But that being the case, I'm still sticking to my normal mechanics where I'm looking at higher IVs if I'm trying to sell those. This is the week though. Like let's pull up Oklo to kind of illustrate my point, right? Yeah, names like this. So this is even only 28 IVR. Just a week ago, Chris, this thing was the IVR. I'm pretty sure the IV was much higher than this. I don't remember exactly what it was, but I thought it was at least about 40. Okay. And same thing with BE. BE is another one of those energy names. I sold vol in that early last week. I closed it middle of the week. And again, the IV ranking here was like 89. I remember for sure. These are ones where typically you're like, okay, these are high implied vol names in general. I'm going to get short vol in those because nothing's going to happen this week. But I'm not going to do that. I'd rather just wait until a vol pop happens and then sell it just like normal, or play some directional thing like you have that directional call spread. That's another way to kind of play the market for the next several days. I think, how much zero DTE stuff we're going to be doing. I really don't. I do some every now and again. Maybe I'll sell a couple of iron condors, like by end of the week type iron condors, possibly just because I expect vol to just sit where at the lows that it's at and the market to drift higher. Maybe that's the other way to play things, but I'm certainly not, going out and putting on a bunch of positions here. I mean, again, vol is really low. There's really not many vol selling opportunities. And I don't think you really want to reach for the BEs or again, Oracle's another one, higher IVR. Like that one has moved around a lot. I expect it to be calm this week. And normally I would sell vol in there, but I'm not going to do it, man. I don't want to get myself tripped up. So I'm going to probably just, I don't have a whole ton of positions on. I've kind of scaled back some after this past week, after expiration. I think the one thing that could be interesting to see is if, usually after we roll off an expiration, do we get some kind of movement afterwards, sort of this sort of release of gamma that has happened. Is that going to happen on Monday and Tuesday? I think that'll be interesting to see. But for the most part, I'm just going to keep it tight. I'm not trading the whole time.
Before we bring Ilya on and go from micro to macro, let's just do a quick scan of the Mag 7, maybe even the Mag 10 names here. Mag 10, what is he talking about? There's a new Mag 10 index. The 3 stocks that are considered part of it are AMD, which is a 14.4 IVR, Palantir with a healthy 0 IVR, and Broadcom with a 10.9 IVR. Your usual Mag 7 names, if we go to an Apple, it's a 0 IVR. Your Amazons of the world, that's a 6.7. We could go over to NVIDIA itself, 1.7. How about a Microsoft? Only an 8. What about a Meta? 0.1. Tesla. Tesla's a 7. Tesla might be my favorite chart setup of any of these names right now because it's ever so trying to break through the high that we had from last December. It's really trying hard to break through the highs from last December. And in a low volume week, Jamal, if things are going to run to the upside, it's usually the winners that run. Okay. People want a window dress. They want to be able to tell their clients, yeah, I hear you had silver in your portfolio in 2025. Of course you did. I'm not a dummy.
Whoever's running the chat, put that as a poll in the chat. Will Tesla break 500 before the end of the year? Yes or no? Simple one. I'm curious to know what people think because, I'm wondering about that one too. That name it looks like it has a date with 500.
It does look at a date with 500, but these Mag 7 names, these Mag 10 names outside of, well, it's actually on the outside of the Mag 10. Oracle is really the only AI-centric name right now that has any sort of interesting volatility profile, broadly speaking. And do you want to trade Oracle given everything that's happening? So yeah, you want to pick the bottom here. You could sell puts against 180 and be compensated for it. But outside of that, not really worth trying to stand in front of a steamroller here as far as I'm concerned.
Yeah, Jamal, no, I have a short put spread in there, and I'm waiting on that to go back and out of the money a little more.
Yeah, I earnings trade for me that did not work out well. We're going to bring in Ilya here. We haven't had a chance to talk about what's going on in other segments of the market yet. We've stayed squarely focused on stocks for the first half of the show. I'm interested, though, because volatility coming in, Jamal, that's not necessarily the case in all other asset classes. I mean, sure, there's still none in bonds. And if you look at the MOVE index, that's now sitting at its lowest level in more than half a decade. But if you look into the currency space, there's been a little bit of vol. There's certainly been interesting price action, something like the yen. If you look to the metal space, volatility is staying pinned higher there. Ilya, can you say those 3 little letters for me so that Josh can be on the hook for a quick mill?
The Fed, baby. It's always about the Fed.
It's always about the Fed.
It's always about the Fed.
My people will be in touch with your people. Thank you. Jamal, we did it as promised. Half is yours. In fact, Tasty Nation, we're retiring Josh's.
Yeah, there was a little bet behind the scenes, folks. You didn't know anything about it. Ilya, what's up, man? How you doing?
Good. I saw a really great stand-up show this weekend. It was Hassan Minhaj and Ronnie Chang doing a debate as stand-up together. It was excellent.
That sounds dope.
My brain is not. I'm not. I'm just too tired for that, Ilya. There's a newborn at home. Nothing's funny right now.
Oh, on top of that, the power went out in San Francisco, so we had to drive into downtown with no street lights and
I saw the Waymos.
Traffic lights.
When the power goes out, the Waymos can't navigate. So
yeah, the Waymos got stuck. It was
what? I didn't know about this. Wow.
Yeah.
That sounded like it'd be
our fearless mayor was transmitting on IG Live from the crisis center.
What? Wow. It sounds like an eventful weekend for sure.
Yeah. It was fun out here.
Ilya, we were talking about options volatility really just getting crushed at the end of last week, at least in equity markets.
Mm-hmm. Yeah.
It's an interesting week for that to have occurred with VVIX falling to 83 with the MOVE index at a more than a half a decade low, right? VIX futures going into steeper contango, yada, 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 as everything we discussed in the first segment. What is the options market implying about growth fears, policy fears, event sensitivity over the next few weeks, considering we just got a rate cut, we just had CPI, we just had non-farm payrolls all within the past 10 days?
I think it's important not to confuse the decline in vol in a decline in the market's capacity to go down. Because I think if you look at this downswing, and we've talked about this before, but it makes sense to mention here. Look at the last major tops in the S&P 500. The year-to-date high is the October Fed meeting, and the most recent sort of secondary local high is the December 10th meeting, or the day after. The market is very clearly not happy with the Fed, and every time the Fed comes out and gives it a major update on what it's doing and what it's thinking, the market goes, oh man, that's not what we wanted, and there is some sogginess after. Have we come to retest those highs yet? No. Has there been anything untoward in the space around AI, around anything that we might look at geopolitically? Has anything gone meaningfully wrong? And more importantly, was last week's data update friendly or not friendly? Well, for the most part, if the markets so badly want rate cuts, they got weaker inflation than expected. They got a set of NFP numbers that was seemingly everything for everyone. If you look at the 4 months that got updated, you got a faster run rate in job losses, about 50K a month. If you take the Fed's math, Powell told us, take any NFP number, subtract 60K, that's the real number. But by the way, shocking to hear that from a Fed chair. It's so directly just going, you know what, the numbers are wrong. We think they're wrong by about 60K. Just any number you get, take 60K off top. Okay, so you take the 4 months that got updated last week, August, September, October, November. Some of it were revisions. October was kind of a half month. You end up with a 50K average for job losses. But then you take that data with the full year and you end up with about a 5K job losses pace. So the economy is not as bad as the Fed thinks, which is about a 20K run rate of job losses, but it's also maybe getting worse faster than the Fed thinks. So pick your poison. But the market couldn't make hay out of any of it and ultimately left disappointed. What did the VIX do throughout the post-December Fed sell-off? Nothing. It oscillated in a range. So do you really need vol to spike to get a sell-off here? Apparently not. So I wouldn't hang my hat on what the VIX is doing here unless there is a meaningful push out of this sort of 14 to 17 range that we've been sitting on for a few weeks now.
Nothing brings a warm and fuzzy feeling to my heart like hearing you talk about the sogginess of the markets. I love it, man. It's amazing for me. But serious question though, overall, what do we do in this environment where it's hard to really make hay of any of the macro data that we're getting now? I mean, it seems as though a lot of it we can't really put any real credence in some of the data that we're getting. Or it just doesn't make sense, or it's late. I mean, what do we do?
Buy silver. You buy silver.
That could be a thing you could do. And
we hit, by the way, literally 2 weeks ago, in 2 days, you and I were outlining a target of $87.82 effectively here on the screen. Thinking like, okay, let's just throw a Fibonacci extension after this breakout.
You mean 67?
67, 82.
I mean, I was going to let it ride.
I'm like,
we might get to 82.
Going there.
I was going to let it ride.
Oh, we're going there. Just
you got a couple shillings to go there yet.
Folks, that just lets you know what Chris Vecchio is thinking. That's what he really has in his head.
Yeah, like silver's up 120% this year. You're telling me that like going another 20% is going to be problematic? Like 67 to 82 is a much smaller leap than 52 to 67.
I mean, I'm with you, and I've been with you. I just got off the boat here a little bit earlier, but not because I don't now wish to have stayed on, and I'm still long gold because I think this is a theme. This is going to continue.
So, like that's kind of my question here, right?
Ahead,
if you're looking at this environment, we talk about the disconnect here in volatility. Volatility in the metals is staying pinned higher. These things have not had the downside move that we saw in stocks. They've been mostly hanging up there, and silver's pressing into fresh all-time highs here to start the trading week. I mean, given the policy uncertainty, Ilya, thematically, why this week of weeks? Why would this be the week where the metals train gets derailed?
There's a couple things here. The metals have their own narrative. And we've talked about this idea that for years and years, it seemed like the market became kind of binary, where when sentiment went in any kind of extreme or any kind of fast adjustment, the market basically split in half, risk on, risk off. If the move was risk on, this set of assets would go this way, this set of assets would go that way, and the market would bifurcate. If it was strong risk off, same thing. The market would split, and yen, dollar, bonds would go up, everything else would go down. And so it's unusual maybe that now it seems like we don't just have one risk off camp. We don't just have one risk on narrative. We have multiples. And perhaps I've argued in a deglobalizing world, that makes sense. It is actually more normal in terms of history, where there isn't just one story, there's a number of speculative stories that aren't necessarily correlated. Right. I think gold is its own story, and silver to some extent.
Well, what about something like crude oil right now, which because we do have to
that's
start
another one.
About winding down here. We've talked inflation, we've talked labor. The following week, treasury auctions. I mean, there's no 10s or 30s, no 10s or 20s, so not really something that we care about. Metals up, energy prices up here on the other side of the weekend. Do we need to be thinking about Russia, Ukraine, U.S., Venezuela here in this holiday shortened week, Ilya? Nothing says Merry
If we
Christmas
break higher, the concern here would be that liquidity is thin. So if you get some kind of a crazy headline, it's going to be much easier to push these things around. So you could get an outsized move just because there's gaps in liquidity. And so that's very possible. Are we going to have any action on the ground in Venezuela? Who knows? The president has been back and forth on it. Apparently, there's now efforts to de-escalate or maybe re-escalate. Who knows?
We seized a Chinese oil tanker over the weekend.
Right. I mean, I don't think this is maybe the best timing. I think, if anything, the president seems to have a relatively decent sense of where the political weather vane is, and is probably not going to want to create some sort of commotion over Christmas. Maybe, but who knows? It's a similar story in the Russia-Ukraine theater. Russia actually likes attacking on holidays. We've seen them do it before. So
for the past nearly 4 years.
Yeah, we've seen them do it before. So maybe this is something, but also news flow from that theater hasn't really been very impactful on energy markets. So is there anything to worry about there? Unclear, but I would say likely not. Structurally, it looks like oil is testing the underside of a range where it broke before. And so now we kind of have to figure out where we are, because that low that you see there, that's the low from April and the Liberation Day kerfuffle. So it makes sense that we kind of lost a little momentum there, and the market is sort of thinking, okay, do I have the wherewithal to take this low out or not? Let's see. But any kind of a sizable push here in anything, oil, dollar, anything, has to be weighed against its thin markets, and making things look like moves of conviction is much easier. And so you want to be careful here before you jump on any bandwagons that appear like, oh my God, this thing has moved XYZ%. That's a huge move. Surely it has followed through. This is a trend change, blah, blah, blah. Yeah, be careful.
You know, I had a thought at the end of last week, which has been sticking with me this weekend, guys. If the Fed funds rate is 3.5 to 3.75% and inflation last week was expected at 3%, the market was effectively saying that the real Fed funds rate, which we were comfortable with, was between 0.5 to 0.75% higher than inflation. Like, that's Fed funds in nominal terms, less inflation, you get the real Fed funds. On the other side of the inflation data, we find out that the real Fed funds rate is actually higher than that, right? Because inflation's at 2.7 and not 3%. So we're talking about 0.8 to 1.05% is the real Fed funds rate now, which, if the Fed thought that it was good and close to neutral. It's now 25 basis points tighter than it presumed. And so if data continues along its current path, which for broader markets here coming out of the weekend, still up by 0.2, 0.3% here in ES and Q, maybe that's enough for us to drink some eggnog over the next few days and get drunk on the idea that maybe a rate cut comes sooner than April or March, Ilya. Maybe we get it.
This is an interesting question because Powell told us in December not to take this data at face value because it might be distorted. And when we got the data and we looked yesterday, or last week rather, at sort of how this data compares, and the sort of benchmark nowcast for this is the Cleveland Fed's nowcast.
Sure.
Same way the Atlanta Fed does GDP, the Cleveland Fed does CPI. And if you look at the relationship between the realized numbers and that forecast, they stick pretty close. This past month of data was the biggest disconnect between the Cleveland Fed's core CPI number and the realized number since, drumroll, February 2020. What could possibly have gone wrong with data collection in February 2020? So this is the worst that the model has missed the real number since we had COVID lockdowns and couldn't survey anyone. Now, for the headline, it was the worst since 2023, January. So this data plainly sucks. It's not very good relative to what we've seen before. So is it going to stay at 2.7 or is it going to get revised to 3.1?
That's next month's problem.
Who knows?
Ilya. That's next month's problem. This week's problem is whether or not volatility stays low and we can float higher. But you know what? That's not our problem today because First Call is out of time. We're, of course, back tomorrow morning, Monday, Tuesday, regular programming here on Tasty Live. Nick, Bat, they kick things off 8 a.m. Eastern, 7 a.m. Central Time. Of course, Vanetta will be there as well. Normal programming Monday, Tuesday, Wednesday, half session only through the morning show. So be sure to get your Tasty Live in before you go off for Christmas. Right now, if you're currently celebrating Hanukkah, I hope you're having a nice Hanukkah. But you know what? For Ilya, for Jamal, I've been Chris. Good luck trading. We'll see you tomorrow. This has been Tasty Live.
Hey, very good morning to you. Welcome to Trade Live with IG on the 19th of December, last show of the year. And you can tell Sparkly over there is in the Christmas